Also, here is the Bank of Ghana today announcing the increase of its benchmark interest rate by 250 basis points for the second time since November. That's raising it to a three-year high of 17% on the back of already high inflation, now worsened by the Russia-Ukraine war. Bloomberg reports that the Monetary Policy Committee decision exceeded the median estimate of 7 economists in its survey, which expected an increase of just 100 basis points. Joining me now for a chat to this latest development by the Ghana Central Bank is Fred DUVOR. Fred is the CEO at APAKAN Securities Limited, based in Accra. Thanks for coming through, Fred, and a good evening to you in Accra. What were the key macroeconomic considerations for the Bank of Ghana's this surprising interest rate hike today, beating even Bloomberg estimates?
Yeah, well, as many people would know, the Bank of Ghana adopts an inflation targeting monetary policy approach, and it has its desired inflation band between 6 and 10%. With that said, the key consideration of the committee during its deliberation has been the recent spike in inflation and its risk pressures. Now, the recent inflationary trend has been occasioned by rising food prices, upward adjustments of petroleum prices following global crude prices, and its effect on transport fares, and also the depreciation of the Ghana cedi and its pass-through effects on consumer prices. So we saw that the inflation print for February was 15.7%, compared to 10.3% for the same period in 2021. And the central bank's own measure of core inflation, which usually excludes energy and utilities, also showed that inflation had increased from 11.8% from December last year to 15.4% this year. So I think that the committee had to meet. I think we would know that it pulled forward its meeting that was supposed to have been held this week. It held it last week. It had to meet earlier to take some of these drastic decisions that it did.
Drastic decisions indeed. Drill down a little bit more into the inflation consideration as a key economic and investment metric by the BOG for me, Fred.
Well, so we can see that the policy tightening stance of the Central Bank of Ghana is not peculiar to Ghana alone. It cuts across the globe because inflation is currently a global issue. We saw that the US Fed increased its rate by 25 basis. I think the Bank of England has also done the same. And today, the Central Bank of Egypt has also increased its rate by 1% for the first time in 5 years. So we see the trend across the globe. In Ghana's specific case, however, we are at the point where investors are earning negative real returns on their investments as the policy rate and treasury rates and other rates on money market investments are significantly below inflation and its expectations. So the central bank had to consider these things in coming up with its decision to increase the rates by the quantum that it did.
Share with me how Ghanaians and yourself coping with this high level of inflation in terms of life and living, quickly. What's the reality on the ground?
You hear it all the time. It's actually been the song being sung on radio stations, and everybody is complaining. Ghana is a heavy import-dependent country, so we are fighting the issue of inflation. Plus, the Ghanaian currency has been the worst performing currency on the African continent this year. So, because we import a lot, the effect of the depreciation is being passed through the prices of consumer products. Plus, we've also had a problem with food production. So we see that food inflation has also gone up. Then there's the issue of global crude prices and its effects on export prices, price of fuel at the pumps. Consumers are also feeling that. And once fuel prices go up, it reflects in everything. So it's actually been tough on the average Ghanaian citizen.
If you add that to exchange rate, does it make your cup of tea or cup of coffee more expensive in the office?
Well, luckily for me, I grew grown made in Ghana coffee, so I'm a bit insulated from that. But
I like that.
A lot of the products and a lot of things that we consume in this country are imported. So we are really feeling the pinch, and we expect that inflation is even going to trend much higher than it did in February. We're expecting, we projected March inflation to be anywhere 16.5%.
Okay, so how would you traders and dealers react to this Bank of Ghana's very sharp uptick in interest rate decision today?
I mean, there's only one path for us. We see that investors, obviously, following this rate hike and looking at where inflation is and the expectations on inflation, investors are going to demand and have already started demanding more on yields in money market instruments. Over the past couple of weeks, we've seen that the auction results have shown that there's been yields on treasury bill rates. In the secondary market, we see that prices of secondary market yields have started increasing. So it is only natural that investors will start demanding more to be able to preserve their disposable income. On the equity market, however, because yields are increasing in the fixed income market, we see a shift in assets by investors. So there's been and we see the effect of that reflecting on the composite index. Last year, the Ghanaian stock market was the second best performing market on the continent. But as we speak, the composite index is around minus 1.8%, which is a reflection of where investors are shifting their assets to.
Okay, so give me your outlook, Fred, on how the Bank of Ghana will decide at the subsequent meetings in May and the rest of the year. This sharp uptake, do you think the governor and the rest of his team will hold fire, at least at this point, May meeting, July meeting, September, November meeting, at least to see how it all works out? If this inflation-backed interest rate hike will help the economy to stabilize, get some price stability in, moderate inflation, and try to keep prices from getting too hot to handle.
Yes, at least for the May meeting, we expect that the central bank will maintain this policy rate at 17. Well, the market was expecting an increase in policy rate, but what we weren't expecting was an increase of this magnitude. So we expect that the central bank will sit out May and see the effects of this increase play out in the market. For the subsequent meetings, being July, September, we expect that there will be a kick in the base effect of inflation. So we expect the inflation, this is holding everything constant, we expect inflation to start trending downwards towards the end of the year. And if that should happen, then we expect that we'll see that the rate is maintained at 17 for some time. However, if things degenerate into something, whereas if Russia-Ukraine tensions continue on the path that it is going, and the currency continues to depreciate as steeply as it is, then there may be consideration for further increases in rates.
Are there very strong, outside inflation, which is an economic data, are there very strong macroeconomic considerations behind the mind of the Bank of Ghana in terms of how interest rates is decided, aside inflation, perhaps Ghana's relationship with the IMF, your macroeconomic fiscal deficit or fiscal balance, as it were? What else is playing out?
Well, I mean, the Ghana's fiscal situation is an open secret. I think recent data released by the Bank of Ghana shows that our debt to GDP ratio for last year crossed the 80% mark. We see that foreign investors have shown that our debt situation is a bit of a concern, and we've seen that being reflected in the prices on the international market. We've also seen foreign investors who invest in our local bonds shifting their capital to more safer economies out there in the West. So for our fiscal we know that it's a problem. The government held a meeting over the weekend at just to discuss how they're going to salvage things in the economy. For us, the main drivers would be inflation and exchange rate, and the Ghana cedi has been under a lot of pressure. I think year to date we're looking at a 14-15% depreciation of the Ghana cedi, and all of that has fed into the central bank's decision to move rates where it has.
Okay, this is Monday evening, dinner time, we're having this conversation. What else is playing out on your markets this week? Give me an outlook for this week.
Well, like I said, we expect there to be a lot of trading activity on the secondary bonds market, and we expect yields to go up significantly on the secondary market. On the equities market, we expect, like I mentioned earlier, we expect there to be a slowdown in market activity. We've already seen that playing out. We're yet to see the full effects or the decisions that have been taken by the government at its meeting to help fix the currency situation and other decisions that could help stabilize things in the economy a bit. But for this week, we expect there to be a lot of trading activity on the fixed income market and yields to increase.
We thank you so much for your time today. Fred DUVOR, CEO at APAKAN Securities Limited in Accra. We wish you all the best. Thank you so much. We'll keep in touch.